let's talk today about economic impact payments or stimulus checks and how the IRS determines amount. Also, let's talk about truth and myths regarding the stimulus checks. And as always, please click subscribe, like or share, leave any comments below and I will try to answer it. So let's start. Economic impact payments or stimulus checks are issued automatically for eligible individuals who filed their tax return for 2018 or for 2019 tax year. If you haven't filed your 2019, your eligibility is determined by 2018 tax year. And if you have not filed 2018 or 2019, you had to file one of those years in order to receive income. So let's look at the first myth and truth. So we all know that adults received $1,200 per person, and if the family had dependent kids, they would receive additional $500 per child. Myth is that all dependent kids receive $500. The truth is that only children who were under the age of 17 at the end of the year for the tax return on which the IRS based their payment determination received $500. Also, the child must have a social security number or an adoption taxpayer identification number. A child with an individual taxpayer identification number, in short ITIN, is not eligible for an additional payment. What it means that again the children needs to be under the age of 17 and having proper documentation. So if your child is over 17 but still a college student, you claiming your child on your tax return as a dependent, your child cannot receive additional $500. However, for example, if you received money based on your 2018 tax year and you haven't filed your 2019, and on 2019 you did claim your child as a college student as a dependent, so your tax return was processed and you only received $1,200. You have not received any money for your dependent student. And your dependent student cannot receive any money because he or she is a dependent. If in 2019 your child is not your dependent, they file independently. And then in 2020 tax return, they're gonna file independently. That student may be eligible to claim a $1,200 credit on their 2020 tax return next year. So here is a myth. Dependents who are college students cannot receive any economic impact payments. Truth is, if the college student will be independent and they can claim $1,200 credit on their tax return. So yes, they do not receive an actual payment, but they can receive a credit on their tax return. Next myth. Everybody eligible receive same amount, $1,200. And the truth is, it's not. Past due child support was deducted from the payment. The economic impact payment is offset only by past due child support. Meaning that if you own the child support, you probably, depending on the amount you owed, you either receive the balance from $1,200 or you might not receive anything, depending again what was the past due balance of a child support. And second is garnishment by creditors to reduce the payment amount. What it means that you might have received the $1,200 into your bank account, but federal tax returns federal tax refunds, including the economic impact payments, are not protected from garnishments by creditors by federal law. And once the proceeds are deposited into a taxpayer bank account, meaning that if you received money into bank account, you could have received $1,200, but if there is an active garnishment on your account, this money was sent to your creditor. So when you look at your bank account, you might see that the amount, there was a deposit into your bank account, and then there was a withholding from your bank account. So the money is gone. And the next myth that is very common that I get actually asked a lot, because this information somehow is not, I guess, circulating, or there is a lot of false information. $1,200 economic impact payment is taxable, will reduce 2020 refund or increase balance due. That's a myth. The truth is that this payment will not reduce a taxpayer's tax refund next year. So if you are getting a tax refund on your 2020 tax return, your tax refund will not be offset by this payment. This $1,200 will not increase the amount of balance due. So if you own a balance due, you're not gonna add $1,200 to your balance due and pay it back to the government. This money is not taxable and should not be included in the income on 2020 tax return. So when you, let's just say you made $20,000 in 2020 and you file in your tax return, you should not write $21,200. You're gonna put only what you earn, $20,000. I hope this was helpful. Please let me know what else you would wanna know. Drop a comment, subscribe, like, share. Thank you. Bye.